you were talking about retail franchises like Bajaj Finance, etc. Another one is IIFL Finance, and this is the first company on our corporate radar. The stock is up more than 58% in the last 1 year. I mean, this is 12 months, but if you just, it's done more if you kind of take the starting point as December 31st last year, it's up about some 70-75%. The company recently entered into an agreement with Capital Group and has obtained a co-lending commitment for nearly $2 billion. To discuss more on this and how the business because of this will be bolstered, Nirmal Jain is founder and chairman at IIFL Finance. Nirmal, great to have you with us here on the program. Thanks very much. We usually have Nirmal on. We've had Nirmal on to talk about what his view on the market, etc., is, which has been prescient as well. But the business which you've built, Nirmal, it's also been incredible, and the markets, of course, are taking note of on IIFL Finance. Earlier on the wealth side, etc. Could you tell us what this agreement, what this agreement really is from your point of view? What are the terms of this agreement, and what will happen because of this from here on?
No, I think there's a small correction actually. The co-lending is with the banks and with not Capital Group. Capital Group has invested in the company.
Okay.
So the co-lending that we are doing is with multiple PSU banks and private sector banks. Right. Here. We use our branch network, our people, and originate priority sector loans primarily, and also other retail loans. And when under co-lending arrangement, 20% of loan is on our books, 80% is on banks' books, and we service the loan through the entire cycle, including the collection and the top up, and further the customer belongs to us. So customer basically serviced by our branches and get the full interest margin on our 20%. And on 80%, we agree with the bank certain rate of interest that we need to give to them, and the remaining comes to us. So
Nirmal, so basically you're the conduit in that sense. For 20%, you're the owner of the loan. For the rest of the 80%, you're the conduit, and the customer is facing you. I mean, they borrow this through you.
Yeah, absolutely. So for 80%, we are the bank's partner, like an agent.
Okay.
So we are sourcing it for bank. The loan goes on the bank's balance sheet, and bank basically is as good as like it's co-lend. So both of us share the risk, pari passu with the loan amount.
Okay, all right. Good morning, Mr. Jain. I think co-lending is currently 8% of your book?
No, co-lending, okay, so the loan assets which are sold to banks is almost about 38%.
Okay.
So we do co-lending as well as the direct assignment.
So that's your off-book portfolio, right, Mr. Jain?
Yes,
the 38% that you're talking about, and that has moved up from around 24%, I think, in the last few years. So where do you see that number headed? And also co-lending is a part of that. So how much will that contribute?
So co-lending, I think, which is, I think is around 8%, might go up to 20% in a year's time. And this entire off-book portfolio, which is about 37-38%, will move towards 45 to 50% maybe in a year and going forward.
Okay. Mr. Jain, good morning. This is Sonia here. Just wanted to talk a little bit about the overall growth, because your retail focus has increased. Now about 94% of your book is from the retail segment. And if you look at the numbers, your consolidated AUM for the entire book is over 55,000 crores, with retail constituting 94%. Can you tell us what kind of growth do you see? On a compounded basis, you've been growing about 15-17% in the last many years. Is that something that you can continue to grow with? And what does the next couple of years look like?
So I think the growth slowed down during COVID period, and our focus is on retail. So the retail segment, we can, we at least, we envisage, or our target should be 25% annual growth for the next 3 years at least. Okay. We see very strong demand, and the branch network that we expanded in the last 2 years should help us to tap the demand. So our targets or our, the guidance would be around 25% growth annually.
Okay.
Okay, all right. Nirmal, give us a couple of other numbers then. Everyone's talking about NIMs likely to come under pressure, but I believe you have ring-fenced yourself even out there, and you believe that you would not like to see big deterioration. I think in the last, in the first half of the year, it was 8.1%. What is the number you're looking at maintaining? And also your, GNPAs were around 2.5%. That is that. Can you maintain it at these levels?
I think, maybe the longer term or medium term, we should look at 6.5 to 7% NIM.
Okay.
And our GNPA should be, below 2%. And cost to income ratio should fall because the pace of branch expansion has slowed down because in the last 2 years, we had a very aggressive expansion of the branch network, and that led to cost to income increase from 35 to 43%. Over next 2 to 3 years, we should see it coming back to the the historical levels. But NIMs, I would say that we should look at 6.5 to 7% as a sustainable NIM over 3 to 5 years.
Okay, 6.5 to 7%, right? You're also increasing your focus in certain areas like affordable housing, small ticket MSMEs, personal digital lending as well. Some of these pockets are a bit vulnerable. Do you think that there could be some pressure on asset quality as the focus goes up in pockets like this?
So 2/3 of our portfolio is gold loan and home loan, where the collateral is very good. And historically, if you see, then most of the mortgage players as well as gold loan companies would not have had any significant loss through the cycles, because you always can realize the collateral, whether it's a house, property, or gold, which doesn't depreciate unlike many other collaterals. So I would say that almost 85% of our book is secured, either against home loan, gold loan, or loan against property, and therefore at least we don't have much concern on the recovery during the cycles as well.
Housing, absolutely, and gold also, because as you said. But gold is how much? You said gold and housing is 50%, but how much
Gold loan is around 32% of our portfolio, and home loan is about 35%.
So when we speak with pure gold financiers, they say growth there has come off quite a bit because of competition. Nirmal, are you the competition, or are you also facing some slowdown there in gold loans?
No, I mean, there's definitely a significantly increased competition by banks as well as many new NBFCs. We have been able to maintain some growth because we expanded our branch network by 40% last 18 months. But if you really see, then the growth is not as much as we would have liked to, or is not commensurate with the growth in the network, primarily because of heightened competition. But I think this is a phase, because in gold loan, what happens is that your operating costs are around 6 to 7% on a fairly mature basis of the loan amount, and therefore the optical NIMs, at 16 to 18% when you lend, look very high, but your ROAs are similar, if not lower than other businesses. So many a times competition becomes very aggressive, but they don't recover their operating costs fully, and within a quarter, 2 quarters, or sometimes in a year, we see that the 10-line NIMs come back. But at this point in time, you are right that there's a tremendous pressure in the gold loan business of very intense competition.
There is intense competition, but your growth in the gold loan space has been pretty impressive. I mean, it's almost a 40% growth that you've seen compounded in the last 3 years. Do you think that is sustainable, or, because of competition, it would be a tall ask?
So this year, growth has slowed down. Like last quarter, I think we had a 4% quarter-over-quarter growth. So, that probably annualized will be around 15 to 20%. So this year we are feeling the pressure of competition in terms of growth. Otherwise, our expanded networks would have delivered more. But I think our growth growth is function of gold prices as well. Because in 2021, when the gold prices went up by almost 40%, every gold loan company grew very well, because your ability to loan against the same quantum of gold is much higher. So I think if gold prices remain stable, then gold loan probably should grow at 15 to 20%.
Good speaking to you, Mr. Jain. As always, wishing you all the best. Thanks so much for joining in and giving us insights into your business. For the time being, though, we'll slip into a short break. On the other side, our technical experts will be with us. Sudarshan Sukhani and Mitesh Thakkar will be joining in.